What is cryptocurrency? Cryptocurrency is a completely digital, decentralized form of currency. It can be used as a means of payment or exchange, though that's not a very practical use today, or as a potential store of value. Since it's a digital currency, you can't carry bitcoins around physically in bill or coin form. All transactions take place online. Cryptocurrency is also decentralized, meaning it's not backed by government authority the way the US dollar, for example, is. Instead, it's maintained by its users. When you buy, sell, or trade crypto, those transactions are recorded on a decentralized ledger called blockchain, which is a permanent, unchangeable record. Any changes to a blockchain must be approved by a majority of users, which also makes it a highly secure form of record keeping. There are many different kinds of crypto, but the most popular and largest by market cap are Bitcoin and Ethereum. What questions should I be asking about crypto? For true crypto novices, just knowing where to begin your research can feel like an uphill battle. The questions you should ask about crypto will depend largely on your financial situation and goals. If you're just beginning to explore digital currencies, you may want to start by learning the important terms and getting more familiar with how crypto works as an investment. If you cover the basics and you're considering buying crypto, these are the four most important questions you should ask yourself before you begin investing, according to experts we've spoken to. 1. Why do you want to buy crypto? 2. What is your risk tolerance? 3. Where and how do you plan to buy cryptocurrency? 4. Which cryptocurrencies would you buy? Have a strategy before you put money down. Clarify your intentions, evaluate your ability to take the risk, and then make a buying plan. What is the purpose of cryptocurrency? The original intention behind Bitcoin, the first cryptocurrency, was to create an electronic cash system people could use in daily transactions. You technically can buy and sell things with it, but Bitcoin's price fluctuates quickly, which makes it a poor fit for spending instead of cash. You could spend $50 worth of Bitcoin on something today that ends up being worth $20 tomorrow. It's also not widely accepted as a form of payment yet, so you'll have very limited purchasing power. While it's not a great means for exchange, Bitcoin and Ethereum have shown investors they can be potentially valuable, if speculative, as investment assets. In other words, people purchase crypto in hopes of cashing out for a profit after it increases in value, just like more traditional investments. Bitcoin, for example, has already shown growth over time. Just 8 years ago, in late 2013, the price of one Bitcoin was around $200, and it now hovers around $30,000 with plenty of ups and downs between. Is cryptocurrency taxable? Yes, but if all you do with crypto this year is use US dollars to purchase crypto, and then keep it in an exchange or your personal crypto wallet, you won't owe taxes on it. In general, the more active a crypto trader you are, the more tax implications there might be. Taxable crypto events include things like selling your crypto back into US dollars, trading one crypto for another, for example, Bitcoin to Ethereum, earning crypto income, and using it to make purchases. For tax purposes, the IRS treats cryptocurrency like other personal assets, such as stocks or gold. If you sell or exchange your investment, that transaction's capital gains are taxable. The complexity of your transaction history will determine how much you'll need to do to prepare for tax season if you have crypto. While there are new companies that promise to organize your crypto for tax filing, it's ultimately your responsibility to keep track of your crypto transactions and report them to the IRS. So if you're making frequent crypto moves, you'll want to stay on top of this. Who controls cryptocurrency? Cryptocurrency creators can set certain parameters when they make a new crypto, such as how much there will be or rules around buying and selling, and those typically cannot be changed. But because cryptocurrencies are decentralized, control of day-to-day operations is distributed among users, and any changes require majority approval from these users, known as nodes. Because cryptocurrency is so new and different from traditional forms of finance, the world is in unknown territory when it comes to regulation. There's little existing legislation around the ownership and trade of digital currencies, although the US government has expressed interest in establishing cryptocurrency regulation.